All right, Bulls and Bears, we're back with another dose of economic reality. As always, let's go ahead and jump right into some news here. The economy continues to implode, and we're talking about the real economy, the people's economy, the working class economy. Of course, the stock market, that's still being propped up. Housing market still being propped up. We are starting to see some corrections, though. Actually, rents came down pretty significantly in a city that you've all heard of, and that could be a canary in the coal mine, because usually when this starts happening in this city that we're going to talk about here in a few minutes, the entire real estate and rental market starts coming down not too far behind it. We're going to get into that. Also, some of you watching this video right now are very, very happy today. One of the trades that we got into a few weeks ago had a huge, massive day, and we're going to get into that. Some of you know exactly what I'm talking about because you're in the trade with me. Let's get into that. But first, let's talk about the rising costs that are still worsening here. Here's something I warned about for over 2 years now. U.S. home insurers, they suffered, insurance companies, home insurers, they suffered the biggest loss in a century. Read that, folks. Century. Biggest loss in 100 years. And what I've been telling you on this channel, what have I been telling you probably for over 2, maybe 3 years? That the extreme weather events were just going to continue to get worse. And it's one of the things that's actually keeping the cost of homes propped up. When you have all this devastation, you have materials being used to rebuild these homes, and it's going to cause more higher prices for materials. Now, we actually have seen some drops in the cost of lumber, but it's going to go back up, folks. I mean, look at all this devastation. The insurance companies facing huge losses, raising everybody's insurance. I talk to people here that I know and clients at my job paying 4,000, 6,000, 8,000 a year for home insurance here in California. In some cases, the cost of the insurance is what a mortgage would be in some other states. Just the insurance. How are people going to keep up with this, folks? And if it was going to just reverse and get better, that would be one thing. We'd say, okay, we made it this far. Things are going to get better. Things aren't going to get better, folks. Things are going to continue to get worse. Look at this here. 20% of Americans face prospect of higher energy bills. We already saw some of the biggest increases in the past few years, especially here in California, but many parts of the country, energy prices are skyrocketing and they're blaming inflation. But the ones raising the prices are causing the inflation. The insurance companies, the stores, the restaurants, a lot of them, it's greedflation. We know it's not just covering the cost, right? So they're always going to put that out there that the high costs are causing them to raise their prices, when the ones that are raising the prices are the reason for inflation. That's not the whole reason, but that's a big part of it. Let's move on here, folks, because a couple things I want to get into. Catastrophic jolts jobs report. Private sector job openings plunge. Listen to this, folks, to a 6-year low. A 6-year low. But yet we're being told just the opposite. The economy's strong, the consumer's strong and resilient. The growth has been amazing. Folks, the growth is just people swiping credit cards, taking out loans, spending money that they don't have. Well, actually, let me walk part of that back. There's a segment of the population that's doing very well. They're spending money that they have actually in savings, and it's the top 10%. You could argue the top 20, even top 30%, but when you look at 70% of people, right, from 70% down, the bottom 70%, if you want to call them that, living paycheck to paycheck. And actually, I talk about investing here on this channel, and I have to kind of second guess that sometimes because a lot of people just don't have the money to invest. Not that I have a lot of money to invest, but the little money I do have, I try to invest because I'm afraid that if I don't invest, I'm gonna get pulled beneath the wheel. Sorry, I bumped my mic. I'm gonna get pulled beneath the wheel of this debt system, right? So I feel like I got to invest, and actually I'm blessed to have a little bit of knowledge and maybe some luck. Doing pretty good here. We're going to talk about that trade here in a few minutes. But regarding that trade, I'm almost reluctant to talk about it because maybe 70% of you watching this video may not have any extra money to invest. Now, I'm hoping that's not the case, because that 70% number, what we've been hearing for a long time, 2 years ago it was like 60%. Now it's closer to 70%. People living paycheck to paycheck. That's the general population. That's the whole population. I think people tuned into this channel and shows like this, shows like mine, are probably, hopefully, a lot of you are in the top 30%. But if you're not, I mean, don't worry about it, because It's not fun to be living paycheck to paycheck, but you're not alone. It's most people. And when most people are in the same boat as you, then you know that it's not just you. It's something going on with the system. And we live in a debt-based system. The money that we issue, the dollar bills, these are debt-based dollar bills. As soon as those dollar bills are created or issued, printed, whatever you want to call it, as soon as they're put into circulation, that's a dollar of debt, folks. That's borrowed money, right? It's not a dollar of wealth like a fraction of gold, like gold-backed currency. That would actually be wealth. That's a debt note. The U.S. dollar is a debt note. So people are asking me too about what we hit 35 trillion now, the national debt. Yeah, 35 trillion recently. They're asking me what I think about it. It's just another trillion, folks. It's the same as 34 trillion. Rewind all the way back to the first $1 trillion. Go all the way back to the first $1 of debt. As soon as that $1 was put out there, you couldn't pay it off because it's a dollar that was put out there as a piece of debt. So now in order to pay that off, you've got to create another dollar, and then that's another dollar of debt in order to pay that off. But they're adding interest to it all the time, right? Interest. And if you just look at the debt per citizen now, on average, USA, all the people in the USA, $103,000 per person. And if you just look at the tax-paying portion of the population, the national debt of 35 trillion is $267,000 per person, U.S. taxpayers. Folks, this is it's unsustainable, and that's why I continue to say it's just going to get worse. They're just throwing more fuel on the fire, more helicopter money. This debt, what was this rescue package a couple years ago? What was the name of it? Inflation Reduction Act. Ever since then, inflation just got worse, a lot worse. And they're thinking that throwing money at the system or throwing money at the problem is going to make it better. Folks, it's not going to make it better. The banks are continuing to loan out money. We're going to talk about that here in a few minutes. Banks need to be tightening right now. They really should be tightening. But when you know that you're just going to get a bunch of money thrown at you when things hit the fan, you don't have to pull back on the lending. And that's why we're seeing this cost of living continue to go higher. The bubbles get bigger. And folks, it's just insane, folks. So let me give you some of the other news we got here today. Talked about McDonald's in your last report, how they're cutting prices now because they got too greedy. They raised their prices too much, and people pulled back on the spending. They had to. The latest one here is Starbucks. Starbucks. Consumers drive second quarterly sales fall at Starbucks. Starbucks has suffered a second straight quarterly drop in sales, underlining the pressures on a leadership team already contending with an activist shareholder and scrutiny from its charismatic former boss. All that set aside, folks, they have sinking profits. People are cutting back. Now, people love their coffee, and they especially love Starbucks coffee. It's like people that are on Starbucks coffee, I say on it, it's like a drug. You're on it. You're hooked on it, basically, because a lot of people I know, they have to have that coffee. Some people every day, some people twice a day. Let's talk about this here. Something we know, but it's interesting to see it put out there in some of the news here. Americans are taking out more loans and falling behind on more repayments. Now, usually when people start falling behind, like we're seeing now, the percentage of people that are behind on their payments, credit cards, car loans, normally, if this was 2008, these banks would be tightening right now. But remember, in 2008, at the very beginning, they were very scared. They didn't know that they were going to be bailed out. Now we have endless bailouts for the mega banks. They're not going to pull back on the lending. They're just going to keep lending, even though more people are getting behind because they don't have to worry about it. They've been guaranteed to be rescued. Do people understand this yet? You see what's going on here? Just because that bubble is big doesn't mean it's going to pop tomorrow. There has to be a disruption in the system of the way money is being loaned out. And I've always said here, we're going to need some sort of massive blackout. And we saw kind of a scare, a couple weeks ago now, where computers got compromised, airports were going crazy, airplanes in the air couldn't land. Folks, we're going to see that times 100 here, I think, in the very near future. So I always say, put money aside, stack some emergency funds, food, water, preparations, because when this goes down, you're going to see the price of everything explode higher, because when the supply chains get shut down, when there's disruptions in deliveries to stores, the shelves are going to be wiped out in just a few days. Some people estimate 48 to 72 hours. If the shipments stop and there's some sort of panic, then the shelves are going to be cleaned out. Remember the panic in 2020 where people were buying up toilet paper and some stores were sold out of it? Luckily, that didn't end up being a mass, long-term mass outage event where supply chains got completely shut down. But we did see the effects of it, and that's inflation. It was supposed to be temporary. The word they used was transitory, and here we are. Inflation still, not only has it not dropped, it's going up. It's getting worse. Let's move on here, folks, because a couple of the things I want to get in here to today. 12-year high on credit card delinquencies. And so that puts us back to what, 2012. That was coming out of the great financial crisis, 2012. Um, Consumers are increasingly holding off on applying for new mortgages and credit cards. A Philadelphia Fed report finds. Yeah, because they know that they can't make the payments even if they do qualify for the mortgage or the credit card. The share of credit card balances in the past year reached the highest level ever in the first quarter. Of course, new highs, new highs, new highs. When it stops making new highs, when it starts actually dropping, that's when you know the economy is crumbling because so many people are maxed out that the economic growth stops because people can no longer spend borrowed money when they're maxed out. We're seeing a portion of the population now already maxed out. Talk about the BRICS here. BRICS nations, new country now plans to ban the U.S. dollar for trade, and that is Zambia. How do you pronounce it? Zambia, in Africa. And there's going to be more nations jumping on board. Will it happen overnight? Well, I don't think the collapse is going to happen overnight, the collapse of the dollar, but I do think we're going to wake up one day and the dollar is really going to lose a lot of value and it's going to accelerate from there. Is it going to happen next week? Who knows? This thing could start any time. But luckily, it's actually playing out more slowly than many people had feared. All right, let's talk about this NVDA trade, folks. Today was a celebration day. I even had to show my wife this trade. And let me just bring up the screenshot here. We talked about this when it ran up here, and I said, okay, I'm going to short it. It ran up to the 131, dropped down to about 123 on the dip there. I think I got in at 125. And it's not actually a short, but it is a type of trade that makes money when the stock goes down. I just use the word short because most people know what that is. This is a put option, folks. And then we got a little bit of a scare. We had a little bit of a scare because then it went from 123 up to 129. I even admitted it. I said, okay, I'm down on the trade, but I think it's going to come back down. I think it's a double top. Folks, look at what happened. And if you've been watching my videos, you remember this. I said it's likely a double top, right? So we seen it go up. Didn't actually reach the previous peak there, 131. That second top, 129. Folks, look at this plunge. We're down to under $110 now. So we're sitting pretty on this trade. I might even close this out here, but I think I'm going to wait for more downside. I'm expecting at least a 50% retracement from the run up from where it was there, but from $11 to 130. So I'm expecting this thing to go back down to maybe $70, $60, right? So I might hold on to it, sell some off at 90. Got 5 different put options here, so we'll see how it goes, right? And I don't do this to tell people, okay, this is what you do. You need to follow me. I'm just letting you know that in any market, there's a way to make money. Look for stocks that went crazy ballistic, and like this one went from $13, just a few years ago up to 110. And if you just look at the last, since December of last year, just the last 7 months or so, went from 48 to 130, right? Nearly tripling. So when stuff like that happens, folks, I'm on it. And, the economy is crumbling. A lot of people are in debt. And again, a lot of people don't have money to even put aside and invest. But again, like I said earlier, I'm afraid not to invest because I'm going through the cost of living like everybody else. And I don't see how people are getting by right now without investing. Some people doing big things in crypto. Crypto is actually up and down depending on how you look at it. Bitcoin is still up near 70,000. Not a big investor in crypto, but I do hold some cryptos. I actually have Bitcoin and many other cryptos. And what I do then is I sell them off when they explode higher, and then I wait They always drop back down after the big explosion, and things like that, folks. Just things I'm trying to do to keep my head above water. And I've got a family here. I've got to look out for them, make sure that I'm doing the right thing, not wasting money, trying to make money with this economic insanity, folks. So, what do you guys think about the news today? Was there any more articles that I missed today? Oh yeah, look at this money creation, folks. With the $35 trillion being in the news, here's the amount of new debt that's being added all the time: $196 billion new debt a month, $6.4 billion new debt every day. That equates to $268 million of new debt every hour. That's $4.5 million of new debt every minute. $74,000 of new debt every second. Right? Created out of thin air. This wouldn't be possible if we had a real currency that was actually backed by something physical, backed by a real something of value. And ultimately, that's what we're going to go back to, folks. I'm really convinced of that. I've got some information that I probably should get into here on this channel. I'm just trying to figure out how to word it that revealed to me that we are going back to that type of currency in the near future. Not 10 years, not 15 years, very near future. I'm thinking within 5 years. But we're going to go through this really, really difficult time first where they're going to try to pump out this central bank digital currency. It's going to be a nightmare. And that's going to be that's going to be reeled in as the solution for the crisis it's going to hit. In my opinion, this crisis is going to hit the next few months, folks. We're not far away. Something needs to be done to cover up this economic collapse. People are getting tapped out, borrowing money from their 401k, and some major changes are going to have to be done after this next downturn. It's going to make 2008 look like a walk in the park, folks, and that's ultimately it's going to be better. So I'm waiting for this thing to happen. I don't want to have any ill things happen to anyone. I don't want anyone to get hurt financially or any other way. But this thing's got to flush itself out. We need a correction, and with the type of thing that's going to trigger this correction, but I think it's going to come out of a foreign compromise of our grid. I think that's my guess of what it is. It could be also a lot of social unrest from events that are going to unfold here in the next few months. Just think 2020 times 100, folks. And that's just my opinion. What do you think about all this? Let me know down in the comments. And hopefully you guys are doing well. As always, keep stacking. Big love. Bye for now, everybody. Peace.